Hello, everyone, and welcome to today's webinar, PPP, Maximizing Loan Forgiveness. Before we get started, I have a few items to cover about this presentation. We have allocated 1 hour for today's webinar, and it will be available on the CFOs to Go website after the live session. There you can find other related content, including our newsletter, blog posts, past and upcoming webinars. If you have questions for our panelists, please send it through the Q&A tab at the bottom of your player. We'll be answering questions at the end of the session. If we do not get to your question today, we will have all questions and answers posted on our website. Lastly, we would like to encourage you to share your thoughts on today's webinar with a quick survey at the end. So without further ado, I'd like to welcome our moderator, Ann Basco. Ann, over to you.
Thank you, Mwape. Thank you, everyone, for joining us today. I'm Ann Basco, the Director of Marketing for Sterling Administration. With the recently released SBA forgiveness application having been issued, I'm sure you are all eager to hear how to maximize your loan forgiveness. We have a lot of content to get to today, so let's not waste any time and jump right in. First, I would like to introduce our partner, CFOs to Go, a hybrid professional services firm consisting of both consulting and recruiting capabilities. They source financial professionals on an interim and consulting basis and recruitment for direct hire positions. CFOs to Go has extensive experience managing and advising companies through many economic shocks over the last 30 years and are poised to help many small businesses and startups navigate through the battlefield. With us today is Chris Burns, partner, startups, internet, e-commerce, and high growth. Jerry Johnson, partner, clean tech. And Tong Chin, partner, international small business, and the former deputy CFO of the Small Business Administration in DC. Chris, I'll turn it over to you.
Well, thanks, Ann, and thanks to Sterling Administration and all of your clients that have joined us today for our webinar. So today I'm going to just outline the content that we're going to cover, and then we'll jump right into it. So most of you that are on this webinar probably already received a PPP loan and are now interested in understanding what to do next. The PPP program is great, but you're probably wondering how you stay on top of the guidance where the only constant is change. How to maximize your PPP loan forgiveness, and preparing an audit-ready and complete support package for your bank to process your loan forgiveness application. Also, we're going to provide some practical guidance on other federal stimulus programs available and help by sharing some of our thoughts on how to manage your finances in a post-COVID-19 economy. So with that, I'm going to jump right into it. So since the PPP program was launched, we're assuming that the continual guidance and updates that have come across as confusing and overwhelming, probably more so than even the IRS tax code. Most businesses haven't had the time or the resource to stay on top of the ever-evolving guidance. We believe that businesses are challenged enough in managing their workforce and trying to meet their customers' needs in a post-COVID-19 economy without having to become PPP program experts. So we at CFOs to Go pivoted quickly the day after the CARES Act was signed into law, and we developed a practice to help clients and prospective clients navigate the challenging, constantly evolving PPP landscape. We built a full team, taking all of our partners across various practice groups and built a team to develop PPP solutions to clients. We've helped dozens of clients already secure PPP loans ranging from $200,000 to over $8 million. After securing the PPP loans, we've built a forgiveness team to get ready for the onslaught of loan applications that the banks are going to be receiving. And that process, we believe, was even more ambiguous for the forgiveness application process than the original loan application process itself. And we know that many banks struggled with the systems. They didn't have the systems, they didn't have process or people to scale the PPP loan application process. And they've already thought ahead of time, this time, with the forgiveness application process by hiring a number of audit firms to help them field all of the forgiveness applications that are going to come in. So my partner, Jerry Johnson, is going to lead off in telling you how we're helping businesses like yours maximize loan forgiveness.
Thanks, Chris. Welcome to everyone here on this webinar. So we are assuming that most of you, if not all of you on the call or on the webinar, have received a loan or are looking for forgiveness. But just to let you know, for those that haven't yet applied, the last word from the SBA and Treasury was there was at least $100 billion left in the last tranche that was authorized to be applied for. So if you were still thinking about applying, the door is still open, and you should be pursuing that straight away, because right now the funding is only supposed to be eligible until the end of June, but nonetheless, there are funds still available. So if you have a loan and you're looking for forgiveness, I guess, getting down to the brass tacks of, how to do that, it's important that you kind of really look at what's required and what documentation you need to be able to accomplish this. So looking at what is forgiven under the current guidance, and as we will allude to and has already been talked to a little bit, the legislation for the CARES Act came out in March of this year. There's been, a dozen more guidance IFRs that have come out. But right now, both the House and the Senate are meeting to, and the House has already passed a resolution or a House bill, and the Senate is looking at trying to do one, potentially either picking up on the House, according to Mitch McConnell yesterday, that they might follow up and just go and vote on the House bill, or they may amend it and do something different. But we'll generally talk to what are the current guidelines right now, but just as a caveat, and the items we kind of highlight in green are some of the things where we see the potential for changes based on this. And it is a dynamic situation. It's been evolving very much over the last 2.5 months since the original, or 2 months since the last CARES Act came out. So in terms of what's being forgiven, it's an 8-week forgiveness period. The items that are being eligible for forgiveness are payroll costs, associated benefits, state and local taxes. And then right now, that has to be 75% or more of the total amount to be forgiven. The other 25% or less can cover such non-payroll costs such as rent or mortgage interest and utilities. And utilities can be water, gas, sewer, even telecom and internet access. As we're showing here, though, there's a potential that this 8-week period may get extended. The House voted to extend it out 24 weeks. The Senate was talking about 16 weeks. The House also looked at trying to lower the percentage that was required to be payroll-based. So for those companies that have a higher amount of costs that are non-payroll, that would help to ensure a higher degree of forgiveness. And certainly the extended period of time would allow for more time to be able to get expenses in to be able to get the forgiveness. So these are all things that would be beneficial for those of you with loans to try and maximize forgiveness. But currently it's at the 8-week period. And the date that tracking starts is the date that the funds are received under the PPP loan. Now for the payroll side, they've come up with new rules that allow you to either use the date of funding and run 8 weeks out, or the next starting payroll date, to make it easier from a documentation standpoint to use even payroll periods. If you have a weekly or biweekly payroll, then you can have nice even payroll reports to run through that. But for the non-payroll costs, they still need to be prorated from the date of the loan is issued to the 8 weeks after that. Now, in terms of the forgiveness, besides just not having a cost applied to it, you can also have your loan the forgiveness be reduced if you have a change in payroll costs, either through a reduction in headcount that isn't restored to that original baseline amount by the end of June, or a reduction in payroll costs per person for those people for payroll costs per person of 100,000 or less. If reduced by more than 25%, the increment over the 25% reduction will be reduced against the amount that you can have forgiven. And both of those are in the situation right now where if you restore those by the end of June, excuse me, then you will have your full forgiveness be restored based on those parameters. As part of the legislation that's pending, they are talking about extending out that period of time to the end of the year, but we'll see. Right now, there's enough difference between the House and the Senate bills that we'll have to see what becomes the compromise that ultimately gets passed, but it does seem like there's generally legislative support to change it one way or the other. In terms of what's required to submit to the bank, because while these are SBA programs, as you found when you were applying for the loan, you're doing it through the bank, and the banks could be the ones that are going to be you're doing the application for forgiveness with, and you'll need to make sure that you provide them with the documentation they need. And as Chris already mentioned, many of the larger banks and many of the banks in general have been hiring CPA firms, audit firms, to basically help them with the documentation, because there are literally hundreds of thousands of these loans out there, and many of the banks just don't have the bandwidth to handle that. So they're going to be using these other firms to outsource it. So the idea is that if you're going to be going to an auditor to do this, they're going to be using audit techniques to try and verify these loans. And therefore, it's important to have your documentation in order to kind of pass, even if it's not officially an audit, they tend to use certain standards that are going to be audit-like. And we want to make sure that, there's no disagreements or issues related to the documentation on that. So next slide, please. So in terms of, how to do that and preparing for that, for the payroll costs, as I mentioned before, you've got these two different time frames that you could potentially do the payroll costs to be forgiven over, either the 8 weeks from the date of funding or the 8 weeks starting from the next payroll period. We do recommend that for these costs in general, that you want to track them in your accounting system, whether it be QuickBooks or some other larger ERP type system. If you set up a project code or other types of things that allow you to tag those costs that are going to be part of this forgiveness, it'll help you not only in being able to track those and make sure you've got everything when you go to put together the forgiveness package, but also you have to remember that while the funds that are forgiven are basically not going to be, well, the whole PPP loan is essentially non-taxable. At the same time, any costs that are associated with forgiveness are not going to be eligible for deduction as a tax expense at the end of the year, because otherwise you'd see that as double dipping. So it will be important not only for the forgiveness project, in terms of the package for that, but also in terms of year-end taxes, that you have these costs that you're going to be applying for forgiveness included in being tagged or otherwise earmarked in your accounting system, so that you can make it easier for year-end tax accounting. With regards to payroll costs, a lot of the major payroll providers and some of the smaller ones we've been interacting with have been coming up with specialized reports that are compliant to the PPP program, where they're automatically taking, the gross wages for each employee, giving you a report and by person that shows the amount truncated to the 100,000 on a pro rata basis. And right now, with the 8-week forgiveness period, if you take the 100,000 divided by 52 weeks times 8, that gets you to this $15,385. So right now, that's the maximum amount of gross wages per person that'll be forgivable. Now, if they extend out the forgiveness period, that potentially allows you to have a larger amount per person be forgiven based on the amount of loan that you first received. But at the current time, it is just this $15,385. Now, that doesn't include any kind of benefits or additional tax-related things, local taxes that are associated with that. The 100,000 only applies to the gross wage part. So you can take those other benefits per person, plus these other non-payroll costs, as part of what you're going to be putting into the forgiveness package. We also recommend that for documentation, you'll want to, besides being able to track these costs in your accounting system, that for the invoices on the non-payroll costs, that you have a way to contemporaneously save the images, and save the documentation of the invoices and payments on those, because with the way that the program has been now interpreted in the most recent guidance, from the non-payroll parts, you not only get the ability to expense or to apply to forgiveness that which is incurred during the 8 weeks, but also what's been paid during the 8 weeks. So for example, if your loan came out, say you got your loan on May 1st, and it ran through then, the latter part of June, the 56 days that makes up the 8 weeks, you could not only be able to apply to forgiveness the utility expenses for May and the pro rata portion of June through the end of that 8-week period, but if you paid your April utility expense in May, you could get the benefit, you could use that as part of your forgiveness. So the way they've recently revised the interpretation and guidance on this, you actually have the ability to apply more than just 8 weeks worth of expenses here on these non-payroll costs. So there's definitely some elements into the details of what they've provided so far that allow for that. Now on the payroll side, they need to be incurred within the 8-week period. So whatever it is, either the date of funding or the beginning of the next payroll period, it's got to be incurred and then paid in the normal course of business. So by the next payroll period, you have to make sure you paid it. So those are not ones that you can necessarily get more than 8 weeks worth of expenses covered. But in most cases, it is something where you want to be able to make sure you've got all the documentation and kind of everything you can, because obviously the goal here is to get maximum forgiveness. And as it says at the bottom, being able to get this put together and being ready for the documentation and for the forgiveness application, the sooner you get it in, the sooner that you get it forgiven. And then you have the peace of mind knowing that you have little or no outstanding loan available to you to be repaid over the next 2 years. Next slide, please. So what we are trying to, besides educating you all here on kind of where we're at with this PPP forgiveness program, as Chris mentioned, we've assembled this team that has been studying this now since mid-March. And we've been staying on top of all the updates and changes that have been promulgated both at the legislative level and also by the SBA and Treasury. And we're here to help. As mentioned before, we've worked with a number of firms to be able to get PPP applications. We've now put together this team that is helping and has put together a set of tools and procedures to be able to help companies be able to put together an audit-ready package for forgiveness, so that when you submit it to the bank, it will go through as quickly and easily as possible, because everything is there, it's all in the right order, the calculations are done right. We've applied all the possible adjustments based on headcount reductions or pay reductions and the like, and everything ticks and ties, and so it'd be able to work in a way where the bank basically says check, 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 and you're off to the races. So as is shown here in the middle of the page, we have a couple different ways that you can reach out to us, either by email or by phone. As well, from the landing page on that, there'll be an input form that you can provide some basic information, and we can then help you get started on the loan forgiveness program. Next, besides the PPP program, what's out there along are many other programs that came out from the CARES Act. And I'm going to have my colleague Tom be able to kind of speak to that and some other things that are out there that we want to make you aware of.
Thank you, Jerry. I'm sure you have learned a lot about the PPP loan program, loan forgiveness requirement after my partner Chris and Jerry's wonderful presentation. We went through a lot of information in this 20 minutes. I would like to use this opportunity to briefly mention various other programs available to small and medium-sized businesses. First, there is the Economic Injury Disaster Loan. If you have already applied the loan and got a confirmation number from the SBA, you should expect an email from the SBA for further information. However, if you have not applied, the SBA is only accepting applications from the agriculture business now. This might change, but for now, they're only accepting applications from the agriculture business sector. The SBA disaster loan can be used as working capital to support your businesses if your business is impacted by the COVID-19. It is actually very different than the PPP loan, since 75% or now it's 60% of the PPP loan must be used for the payroll purpose. On the other hand, the disaster loan doesn't have the forgiveness feature. The maximum loan term is 30 years and the interest rate is 3.75%. You can use a disaster loan for any type of working capital. So you may have both the PPP loan and the disaster loan. However, this is very important. You cannot use the two loans for the same needs. And this principle applies to all the government provided benefits. You cannot use different funds for the same purpose. because I know there's other programs available from city and state, but be careful not to use the same funds for the same not to use different funds for the same purpose. In addition to the PPP and disaster loan, there are also other programs. We have listed some of the major ones that impact the small businesses on our slide. The SBA Debt Relief Program applies to borrowers that have the SBA 7A 504 or microloans. If you're not familiar with the SBA 7A 504 and the microloan program, please refer to my earlier blog on the CFO to Go website. The various SBA loan programs support small businesses that cannot get a loan through conventional financing. I would like to emphasize, if you took the PPP loan, then you cannot take the employee retention credits. We also list the employee retention credits here on our slide. The 5-year carryback on NOLs for tax year 2019 and 2020, businesses can utilize NOLs generated in prior years to offset 100% of taxable income. And then there is the Main Street Lending Program. This program is a loan facility constructed by the Federal Reserve that will allow small and mid-market firms to obtain bridge financing due to the COVID-19 crisis. However, I have to emphasize there's a minimum loan size for this program. Then the minimum loan size is $500,000. And the long term is pretty short, it's 2 to 4 years. I will post further information about this program on our Q&A session. So for those of you who are still short in cash, can consider apply for that program. There are other tax credits and tax deferral available for small businesses. Because we only have a limited amount of time, I'm not going to talk about all of them. Should I apply for the employee retention credit instead of the PPP loan? Should I bring my employees now back from employment? What other loans are available for us? I know we have already given you a lot of information. Are you overwhelmed? I know I am. Even I've been working in this area for more than 20 years. There's just new information coming out on a weekly or sometimes daily basis. Please talk to your CFO and your other executive teams to prepare a financial plan for the next 12 months. Giving a loan or getting forgiveness of the loan is just the beginning in fighting this economic downturn. To survive and thrive, you need to have a 2-year financial plan. No matter what loan program you are thinking of, you need to have the plan before you're seeking for additional capital. So talk to your bankers, tax accountants, and other advisors you may already have worked with. If you don't already have one, our team at CFOs to Go is ready to support you on every step of your business. Next slide, please.
Well, thanks, Tom. Now that we've talked about the PPP loan forgiveness program and other programs available as part of the CARES Act, we want to talk a little bit about the other challenges that companies are facing in a post-COVID-19 economy. We believe that almost all small businesses are in a battle for survival right now, and large businesses as well. And those that are not taking significant actions to both strategically and tactically plan for the battle ahead may fail. The U.S. economy is facing the most significant supply and demand side shock it has ever sustained, with investment bankers and Federal Reserve Bank presidents forecasting contraction in Q2 GDP between 25 and 40%. While revenue and cash inflows have dramatically decreased, businesses that are slow to respond with significant expense and cash burn reductions may run out of runway and find themselves needing additional capital much sooner than originally planned. And outside the CARES Act programs that we've described today, the terms are not going to be very pretty in getting additional capital, and a lot of those sources of capital are pretty elusive. So cash preservation has never been so important. So this slide has a subset of our recommendations for small businesses and large businesses to employ to significantly reduce their cash burn. Most businesses' largest fixed cost is their payroll. While the PPP program that we've highlighted today will help with some short-term relief, we believe all businesses should be examining and planning for their headcount ahead and may consider significant headcount adjustments, either temporary or on a permanent basis. Cutting all discretionary spending is paramount, and if you haven't done so already, we recommend eliminating and deferring all of the spending for at least 6 months or more. Many companies already right away cut their travel, their conferences, their in-person learning, and many other expenses significantly as a result of COVID-19. However, one of the bright sides here is that the remote working environments that everybody was thrust into, we believe are going to be maintained for years to come and generate significant cost savings opportunities. We recommend moving to a rolling 12 or 13-week cash flow forecasting process so that you get very clear visibility into all of your incoming cash flows and your outgoing disbursements. We recommend that the CFO or controller of your company should be working immediately on improving your working capital efficiency by negotiating with vendors to stretch out payment terms where possible, and working with your customers to do the opposite and try to bring in cash inflows sooner, either through extended multi-year programs and extending contracts and agreements that you have with the customers, or in other ways. So finally, if you do not have the sufficient financial management bandwidth or financial experience in your business already, we recommend engaging a trusted CFO consultant as a fractional CFO to help you put your business's battle plan blueprint into place as quickly as possible. Our consulting partners have experience in managing through major economic shocks, and large and small businesses have been part of what brought us to become consultants today. So we're ready to help right now. And with that, I am going to turn it back over to our moderators, and we're going to launch into the Q&A portion of our session today.
Great. Thank you, Chris, and thank you, Tong and Jerry. So for everyone on the call, we have until about 2 o'clock. So we have a lot of questions. So I'll just start with the first one, which is, do 1099 contractors not on a payroll apply for the PPP loan forgiveness?
Yes. The guidance on that is very clear that in doing a PPP loan application, contractors are not eligible to be part of the company's payroll costs, but they are eligible individually as whether they be part of a LLC or just a sole proprietor or independent contractor, they can apply for PPP loans themselves.
Okay, great. Thank you. Here's another question. Can we get forgiveness on payments made to life insurance policies for the officers of the company?
I think the guidance is not super clear on that, but the guidance that we've seen suggests that the life insurance policies and premiums on life insurance do not necessarily apply to the benefits and insurance premiums that were outlined in the guidance.
Yeah.
Okay, thank you.
The mention was basically healthcare insurance rather than life insurance, which is a separate benefit.
Mm-hmm. Okay. Okay, great. Next question from Laura Lewis. When is your post-PPP loan FTE measured? The last day of your 8-week window? What if you need to lay people off or reduce hours after the 8 weeks because you still aren't open?
The measurement period is for full-time equivalents in comparing to baseline headcount is at the end of the period. However, as we've mentioned, it is possible as well that they're going to be extending that period beyond the 8 weeks to a 16 to 24 week period. And part of the impetus towards changing the covered period is to give businesses an opportunity that may have shuttered or closed down their operations completely to still take advantage of the forgiveness opportunity associated with the PPP loans. But once the period has ended and you've measured your headcount, if headcount decreased by the end of the period, you're still going to have until some date, and it's not certain yet. It was June 30th, and it might end up extending to December 31st, by which you could restore your headcount that was reduced during your 8 or 16 to 24 month period. You could restore that headcount by December 31st or the June 30th date and still not get an additional reduction in loan forgiveness. And many businesses are, as I suggested, looking at their headcount over the intermediate and long term, and they may need to reduce their headcount after the end of the covered period. And that'll be fine as long as the covered period headcount met the baseline targets.
Okay, thanks, Chris. Next question from Anonymous. Are costs on a cash basis or accrual basis from date of receiving the loan?
Primarily, they're on an accrual basis, but the payment timing is important. So for payroll costs, it is strictly on an accrual basis, whereby it's the 8 week period, either from the date of funding or the date of the next payroll, that it's the actual payroll expenses incurred during that time that are going to be part of the forgiveness. But they need to be paid in the normal course of things. So if you have a 2 week payroll period, that you would normally be, if you say paying a week after the payroll period ends, those payments that are part of that incurred basis need to be paid in the normal payroll cycle, so that they basically are eligible to be forgiven. For the non-payroll costs, they've actually created a little bit of a hybrid where they're able to count what's paid on a cash basis during the 8 week period, plus those expenses that are incurred during the 8 weeks, as long as they're then paid on normal terms, shortly either during or after the payroll, the 8 week forgiveness period.
Okay, thanks, Jerry. Here's a question from Leela. How do you calculate FTE by June 30th? Will it be for timesheets just for the day of June 30th, or the pay period covering June 30th, or an alternative?
Jerry, you want to take that?
Sure. So for that, I'm just trying to get it here so I could make sure I read it.
It's at the top now. We deleted a couple.
Oh, okay, you did. Okay, that's why it started moving on me.
Yeah, we did a little housekeeping. Sorry.
There you go. Thank you. So the way that they're doing it right now, the way the guidance currently says is that they're going to be taking, the most recent payroll period and doing, taking the hours worked on a 40-hour work week basis. And so if somebody's working 30 hours, they would be counted as a 0.75 head count. If they're working 40 or more hours, it would be a 1, because you can't get credit for more than 1 per person. But that's the way it's currently been interpreted right now based on the guidance.
Yes, and that's a tricky one as well, because as we mentioned earlier, there's been so many revisions of guidance throughout the last couple months. And originally, they were talking about a different way of calculating FTE, but the way that is current in the guidance is consistent with what Jerry said and more traditional. That's the way that most companies calculate FTEs. And
one thing to also bring up too is that when you're looking at this from a reduction of forgiveness standpoint, you have the borrower has a choice as to what period to use the baseline. You can either use the average from February 15th to June 30th of 2019, or you can use the period of January 1st through February 29th of 2020. And obviously, whichever one gives you a lower average number of employees is a better one to use, because you're comparing that to the period that you have during the forgiveness period, and you want to make sure that you don't go under the baseline, so you want to pick the lower of the two.
Thank you. Here is a question from James Herope. Oh, I just lost it. Here we go. Is there a timeline for Congress to extend the coverage period and the percentages?
No. I mean, it's Congress. They can do what they want.
Yeah.
So while they're certainly working on it, I mean, the House actually passed their bill last week, 417 to 1, which is about as unanimous as you're ever going to see out of either body. The Senate is considering that, but it's a matter of them deciding. And if they make any changes under the normal legislative rules, it has to go back to the House to then confirm that before it can go to the president. So depending on what the horse trading is and how quickly they see this as a need, I think there's been generally strong bipartisan consensus that they do need to do something to help people get the maximum forgiveness possible. But how long it'll take to make that decision is up to Congress, which we'll see.
So stay tuned.
Right.
Thank you. Hannah is asking, what do you do about employees who decided not to come back?
So employees that have declined to come back are potentially excluded in that calculation that determines reduction in forgiveness. And as long as that is documented, that they were given an opportunity to come back, but that they declined it, then not having that one headcount on the payroll at the end of the covered period will not deduct from loan forgiveness through the loan forgiveness reduction calculation. It'll obviously reduce the amount of payroll that the company has that's eligible for forgiveness, but it will not get, there will not be a further reduction.
And at the same time, too, as part of the same guidance that kind of clarified that point, they also said that if you have an employee that's terminated for cause during the course of this 8-week period, that would also be something to be excludable. It doesn't make you have to keep employees on in order to get the forgiveness. If in the course of things they do something that is a chargeable offense, be able to terminate for cause, then you could also exclude them from the forgiveness calculation.
And then it's worth adding that companies may have let go headcount and tried to bring people back, and either because those people declined or for whatever other reason they found another job, that you can bring on other employees, and the employee headcount that you're comparing at the end of the covered period does not have to be made up by the same group of people that were in the comparison period. So it's important to note that you're being measured on your total FTE headcount, not specifically person by person.
Okay, great, thank you. Another question from Anonymous. I've heard from another webinar that those employees who were paid within any pay period in 2019 and annualized that is greater than 100K, that employee is excluded from the forgiveness portion. Is this correct?
No.
No.
I mean, what the rules, what the legislation said and what the guidance has emphasized is that you do not use more than 100,000 on an annualized basis in either the calculation of the loan under the application or under the forgiveness portion. So if you have 20 employees and they're all making over $100,000, you still have a PPP loan amount and you still have an amount to be forgiven, but you can only count the prorated amount of up to $100,000 a year salary to be able to apply either for the loan or for the forgiveness, which is where that $15,835 amount came from. It's the $100,000 cap divided by 52 times 8 weeks.
Got it, thank you. Glenn is asking, do we have to claim the loan as income at the end of the year?
No. It specifically says in the legislation that it's not going to be deemed to be taxable income, but as I mentioned before, the forgiveness amounts to be forgiven can't either be counted as deductible expenses for tax purposes. So you're able to get the benefit of the funds coming in, but you then can't also take the double benefit of it being able to expense the forgivable expenses related to it.
And with that said, there are other moves in Congress to try to challenge that assertion that the expenses that qualified for forgiveness are not tax deductible. And I think that's being pushed through, but not quite at the same pace as the legislative changes to extend the covered periods and other components that we've been talking about today. So the jury's still out on that, but for now, it's the incoming forgiveness is definitely not taxable.
Okay, thanks. Hannah has another question for us. If you incurred a large capital expenditure during the 8 weeks, can that be included in the non-payroll 25%?
No, a capital expenditure cannot be included as part of the forgiveness. It's the expenses associated, the non-payroll expenses that are clearly identified. And even there, with those non-payroll expenses, you have to have had those expenses in place as of February 15th through either a lease for, in the case of rental, or a utility service. The service had to be in place prior to February 15th. You can't just start adding a bunch of services that you want to be covered free through the forgiveness program. And so companies that are opportunistically trying to add on expenses, or certain capital expenditures just aren't part of the forgiveness, but companies that are trying to add on opportunistically, either through non-payroll costs or even on the payroll costs, we've heard questions such as, well, maybe now is a good time to pay all the bonuses from 2019 here in 2020 during this forgiveness period so I can get those costs forgiven as well. And that, as Jerry said, is just not part of the spirit of the program, is to only cover the payroll expenses during the covered period.
Got it. Okay, another question. The 25% is on the entire loan forgivable, or just the portion we are asking for payroll forgiveness on?
It's 25% of the forgiveness can count as can be made up by non-payroll costs.
Non-payroll.
So it's 75% or more can be made up by the payroll costs.
Okay, thank you. This is from Anonymous. If our company furloughed employees prior to receiving the PPP loan, do we need to bring the employees back with 8 hours a day if there is a payroll deadline to bring everybody back at 100%?
So the deadline right now is to bring back headcount by June 30th. That is one of the things we're talking about extending. And in fact, it gets complicated by the fact that with the second tranche of loans still being out there, you may have a loan that basically is still in process, it's still in the 8-week forgiveness period by June 30th. So, but right now, the idea would be is that you're going to want to compare the average headcount that you have during the forgiveness period versus the baseline of either January 1st to the 29th or February 15th to the June 30th of 2019. And then that can help, make your decision as to whether you're trying to bring people back. But at the same time, it's also conditioned on the idea, as we were talking, more generally, and Tong and Chris both mentioned, that it needs to be part of a financial plan. I mean, granted, you want to have maximum forgiveness, but you've got a 6-month deferral of any payments being made. And if your business isn't going to be able to open up until after the 8-week period, it may not make economic sense and cash flow sense to bring the people back. So while it may help maximize forgiveness, you may still be short on cash before you can actually open and generate revenue again. So I think it really needs to be kind of thought of as part of our overall forgiveness, cash flow plan.
And as Tong, our partner on the call here, reminds us frequently that getting additional capital for businesses right now is extremely difficult. And to the extent that you can use your PPP loan to provide support for ongoing business, we believe businesses shouldn't be rushing to bring back people that may not be necessary right now that may not be able to be leveraged right now by the business, but instead to hold on to that capital, which is an extremely low cost of 1%. And with the deferrals that Jerry mentioned, it's a 2-year, today it's a 2-year loan, but part of the legislative changes that are in play right now are intended to potentially extend that to a 5-year loan. So capital and cash preservation is the most critical thing for most businesses right now. And so while we advocate maximizing loan forgiveness, we also wouldn't suggest getting wrapped around the axle on just that piece, and to maintain the capital if you need it to deploy it in more productive uses.
Okay, thank you. Next question. What type of payroll report will need to be submitted for the forgiveness? Payroll registers, 941 reports. Can we simply create a report and submit that?
So the reports that we were looking at would be, because you're talking about 8-week period, it would be the payroll registers for those periods, those payroll periods that relate to the 8 weeks, either the ones that start from the funding date to 8 weeks out, or the next payroll period. You would not necessarily have a 941 report, because that's going to be a quarterly report, and you're only talking about 8-week periods, so that wouldn't really give you the right information. So it would be basically your normal payroll register for the appropriate weeks related to the forgiveness period.
Yes, and we did see guidance in the loan forgiveness application that suggests that those quarterly reports may be required, and to the extent that the period extends above and beyond June 30th, then they'll probably be asking, some of the banks will be asking for that as support in addition to a payroll register, but payroll register is the most critical, and most of your payroll companies have already set up ways to help you get the payroll register to enable you to have it in the right format, so that it can be used, and so that you can prorate the payroll as necessary to cover whether it's an 8-week period or a 16-week period or a 24-week period. You should be able to get that directly from your payroll company.
Okay, thank you. And I may need some help translating the next question since I'm a marketing person, but I'll do my best in the panel. You guys jump in. Received account loan 410. I'm going to guess this means payroll was 3/30 to 4/12. Payday is April 16th. Next payroll date's 4/30, 5/14, 5/28. Can we adjust our payroll dates to 4/16 to 6/10 and pay our regularly scheduled PR that would have been payday on 6/11 to 6/10 to get 5 payrolls into that 56 days? How'd I do?
Well, you read it well, but it was written in a way that definitely was like, this is for accountants only.
Thanks for that.
The short answer is you can't game the system on this. They've made it very clear that the payroll costs have to be for the incurred days of the 8 weeks, whether they be starting on the payroll date or starting on the funding date, and it's for the 56 days, so that you can only have 56 days worth of payroll being expensed, and it would be based on those 2 different timeframes depending which date you start with. And they would be paid in the normal course of business, whether during the 8-week runoff period or the subsequent payroll after, for one that might be a stub period that extends past the 56 days. So while you could try to manipulate your payroll side of things, that's going to be something that the banks will see, and they're going to make you come up with something that only fits for 56 days worth of payroll.
However, there's also the guidance that came out recently for those companies that are doing biweekly payroll, so payroll every 2 weeks, or payroll weekly. There is a provision to enable you to change that 8-week covered period to start when your next payroll period begins, so that you don't have to do any prorating. But that's only going to work for companies that do payroll every 2 weeks or every 1 week, because it'll correspond to the number of weeks of the covered period, whether or not it's 8 or it gets extended to 16 to 24.
And I guess one thing to add, since we've been talking quite a bit about payroll costs, is that in terms of what's going to be eligible for gross wages to be paid, besides the normal pay that people get, if you're paying people spot bonuses for extra effort during the work, say they're coming back in, or hazard pay or premiums like that to be able to have people come back to work, those are eligible costs that would be included in the forgiveness portion. Now, the ability to try and take a 2019 bonus and pay it all within the 8 weeks, that will probably not pass muster with the banks. But if you're paying something that relates to the 8-week period that you're getting forgiveness for, that's in essence incurred during that time, then you should have that should be eligible for the forgiveness.
Okay, thank you. Next question from Dennis. We have 2 employees from a staffing agency. Will their pay be part of the forgiveness?
No. They have to be W-2 employees. If they're through an agency, then you're getting paid by the agency, and they would be under their auspices to be able to get payment for, or they would be paid as a 1099 contractor, in which they would be eligible to apply for PP loans themselves.
Okay, thank you. James has a question. If the time period remains 8 weeks, can you prepay a payroll?
No. It has to be incurred during the 8-week period.
Okay. Beth is asking, oh, oops. I might have skipped one. I'll go with Beth. We have maintained our headcount during the 8-week period outside of 1 voluntary resignation during that same 8-week period. Will our forgiveness be reduced by the salary of that 1 resignation?
No, the person resigning basically, but based on the current guidance, they would be excluded. If they voluntarily left and were not terminated or otherwise had reduced hours to push them out, then they would be excludable from your calculation.
Okay, thank you. And then this is the one that I missed before. If I mistakenly failed to include certain employee benefits in my original PPP application, can I now include these in my forgiveness application?
Yes.
That's a great question. There isn't guidance suggesting you cannot do that. And the costs that are eligible for forgiveness are clearly outlined to include all payroll costs and the qualifying benefit costs, et cetera. So we think that should be allowable. Okay,
thank you, Chris. Carol has a question, another payroll question. Can we count a payroll 2-week time period that ended on May 30th and paid on June 3rd if our loan was deposited May 26th, or do we have to prorate?
You would have to prorate. Either that, or you would have to, start the payroll from the next, do the forgiveness for payroll on the next payroll period. But if you just basically did the 8 weeks from the date of when the loan was funded, you'd have to prorate that payroll that was kind of overlapping the beginning of the loan forgiveness period.
Okay, thanks, Jerry.
And as a clarification, again, at least with the current guidance, but we've suggested already that guidance could change another 10 times before this is all over, you're only eligible to change the covered period to what they call the alternative covered period if you're running payroll every 2 weeks or every week. And so it doesn't actually help with the proration issue for companies that do 2 payrolls per month.
Okay, thank you. Another question from Anonymous. How soon after the 8-week period does the forgiveness application need to be submitted?
That seems to vary by the bank. There are some banks that actually that we've seen language where they want to have it submitted by the end of the 8-week period. Others are basically saying that it has to be submitted within 30 days. We know that from general conversation with the banks, they're not looking to hold on to these loans very long because at a 1% interest rate, there's not much money in it for them. So they're looking to roll out of these, so they're incented to do that. Now, on the flip side, the banks have to determine forgiveness within 60 days from the application of forgiveness. So they do have some time, but they are prompted to be able to deal with these forgiveness applications in a relatively timely way. So there is some push on that, but right now the period in which it has to be submitted to the bank is somewhat bank specific.
I would like to add, please check with your bank where you got the loan from. I have heard various banks are actually posting webinars about how to do the application for forgiveness. And then they will tell you when's the date for apply. I don't believe any bank is accepting application form for forgiveness yet. But those things you really need to go check with your bank where you got the loan from.
Right, and also I guess I would add that even that many of the banks, when they did the original applications and they did the promissory notes associated with the loans themselves, they did not have guidance at that point on when forgiveness applications would have to be submitted. So some of them defaulted to an assumption that the application would be submitted right at the end of the 8 weeks. But from a practical standpoint, that's not going to be possible if the payroll support that's required extends beyond the end of the covered period. And if the documentation for some of the non-payroll costs that are eligible for forgiveness, if they're not paid until the end of the 8-week period, then you won't have proof of payment. So I believe that many of the banks will be relaxing some of those date-specific requirements that were in the original promissory notes.
Okay, thank you. Another question, can 100% forgiveness be achieved through payroll costs alone?
Under the current guidelines, it would be difficult to do so unless you actually increased the number of people on your payroll during that 8-week period. Because when you think about it, the applications were based on average monthly payroll times 2.5. Now, if you think about the fact that a month is normally a little bit more than 4 weeks, and so if you take 2.5 times that, you're talking approximately 11 weeks worth of payroll costs that you're getting funded on. So if you only have an 8-week forgiveness period, the only way that you could get 100% forgiveness on payroll costs alone would be if your payroll costs went up during the forgiveness period versus what your baseline was when you first applied.
Okay, thanks, Jerry. And everyone, we're coming up on 2 o'clock, so we'll do one more question. And then for the audience members, we'll share out all the Q&As and then the unanswered questions too as an email follow-up. But this last question is, we paid our Q1 state unemployment taxes, which is the majority of it for the whole year, on first $7,000 of wages a few days before we received our PPP loan. Can we use that payment as part of our PPP loan forgiveness application?
Yes, we believe you can, because to the extent that the expense was incurred during the 8-week period, then you're going to need to prorate that insurance payment that was made. And again, they're only covering state and local taxes. So, but it should be able to be included, but you can't put the whole year's expense in there. It should be prorated for the 8 weeks.
Okay, thank you, Chris. Well, we're just at 1:59, so I wanted to thank this great team from CFOs to Go. A lot of really dense material, really great stuff. We will share out the questions and the answers and the deck to the attendees, and we also have recorded this session and we'll have that available too. Thank you so much for joining us today to discuss how you can maximize your loan forgiveness and managing your finances in a post-COVID-19 environment. Thank you.
Thank you all.
Thanks.
Thank you. Thank you.
Bye-bye.
Bye-bye.
Bye-bye.